All right, welcome everybody to this week's stock market review. My name is Bennett McDowell with traderscoach.com, and today is April 3rd, 2024. So happy spring to everybody out there. All right, so markets are doing a little better today. We're going to take a look at the charts and get a fix on what's going on. You know, Bitcoin came down a little bit. We want to take a look at that chart to see if there's any opportunity for accumulation or if it's going to go further down. So I do want to analyze that today as well. All right, so let me go ahead and get started and go through some of the administrational items first. And that, of course, includes our talk about the risks involved in trading. Like I always say, without those risks, there are no opportunities. So the two really do go hand in hand. So you need to protect yourself against the risk. And the best way to do that is to A, fund your account with money you can afford to trade with. That's called risk capital. And then also, two, know your risk on each and every trade or even investment for that matter. Know where you're going to get out, know the proper size of the contracts or even the shares you buy in order to control that risk. And we have a whole book devoted on that I've written on money management and risk control that can help you if you need help in that area. Also, two, check with your financial advisor. We're going to talk a lot about markets, stocks perhaps today. And you don't want to do anything unless you, of course, run that by your financial advisor to be sure what we talk about here is suitable for you. That's really important. And then finally, no guarantees in the markets. We deal in a realm of probabilities, which is why we really need risk control, right? So keep that in mind, too, that, past performance doesn't guarantee future performance. And also, too, again, know that there are risks. You can't take the risk totally out of trading or investing in the markets. All right, so two books I want you to take a look at. Money Management for Traders, if you need that help, is in there. My new book, The Art of Trading, is coming out by the end of either summer or early fall, and that's being published by Wiley Publishing. I think that's going to be one of the best books I've written, simply because I'm going to be talking about the latest concepts in trading the financial market since my first book came out. Also, too, McGraw-Hill published my Elliott Wave Trading Techniques many years ago, and that's been a really bestseller as well. And you can check that out on Amazon. I'll put some links below in the recording, or you can go to our website and take a look. All right, I'm going to go ahead and go full screen here. I want to first cover what's coming up this week. And so for this coming week here, starting, of course, on Wednesday, since today is Wednesday, we get ADP non-farm employment change, okay? Services PMI, we've got ISM, crude oil inventories, Fed Chair Powell speaks, and the initial jobless claims. All right, so on the Fed Chair Powell speaks, we'll see what he says today. He speaks at around 12 o'clock, 12:10 Eastern time. Now, with interest rates in general, there's a lot of speculation on what's going to happen. Some people feel that inflation is not under control, and therefore rates will not get cut. Some people feel there'll be no rate cuts. Some think there'll be just one or two, and of course, some people think there'll be more. So there's a whole bunch of opinions out there. And the thing is that I think if you look at it, they stayed flat this last time. They're talking about a June rate cut. We may get that. Okay, we'll have to wait and see what transpires with that. But even a slight rate decrease in June, I don't think is going to do much in terms of spur the economy along. We'll certainly see. It may help the real estate market a bit. Of course, we're heading into their spring season, so we'll talk about that. There are more listings coming on the market this year so far than last. So that's at least a good sign, and maybe a drop in interest rates. We'll take a look at that. We're going to be looking at some of the REITs in real estate, specifically the CBT, and that will give us a clue as to what may be in store for us this spring. All right, so we'll take a look at that. All right, so the next thing I want to go over, of course, is when we look at charts, you're going to see some tools loaded on the charts that you may not be familiar with. That's software that we use here, and it's called the ART software. We have many indicators associated with that. We have scanners and risk control software. If you're interested in learning more about our software tools, I'll put a link below as well in the recording. All right, so that takes us to the current chart right now that I want to go over. And if you take a look here, this is the daily chart of the Dow Jones Industrial Average. So the daily chart, what that really means is that every price bar represents a full trading day activity. This is kind of the normal chart you would see if you went to like a website or opened up a magazine or something and looked at charts. This is normally what you see. Now, day traders use a much smaller time frame. They use what they call the intraday time frames, which basically means their charts are in minutes, 5 minutes, 60 minutes, and so forth. So that's what they use when what we're looking at is a more intermediate term look and a normal look at the market. So you'll see a bunch of stuff on this chart that you may or may not be familiar with. I'm going to start here with the numbers. And you can certainly see I have a 3 there, a 4 here, and then I have a 5 up here. So what is that? Well, that is the Elliott Wave. And basically, that is a form of technical analysis, which means that there are 5 waves or movements or swings, rather, in the markets. And so these kind of represent trends in the markets. So when you get to the 5th wave, according to the Elliott Wave analysis, you are at the end of the trend. And after that, you have a change in trend. And so one of the things I want to bring your attention to is that we have a target up here for the end of the trend, which is the wave 5. And that's on the right-hand side of this chart. Now, how do we get that target? Well, that target is not something we just guess at. It is a target that we basically get from the fib extensions, which is another form of analysis that basically takes into the Fibonacci numbers, which I'm sure everybody has heard of by now. And so that is a fairly precise zone. It's not an exact number, it's a zone, and it ranges from, in this case, a low, 40,281 up to a high of 47,426. So that's the target range for the Dow Jones Industrial Average before this very bullish movement we've been in ends. And then after that, we can expect to move down. So we're pretty close. The market, as of Sunday, and we'll look at it now, was at 807.37. So this chart was drawn on Sunday, March 31st. We're going to look at the live chart in just a moment. But I want to share this chart because I've marked it up, and you can kind of clearly see where all the targets are. So once we get into that target zone, then we have to be really careful of a change in trend. In other words, going into a bear market. Now, what's interesting is 70% of the time we get in to the target zone for a wave top. So it's pretty accurate. However, 15% of the time it's shallow. In other words, prices don't quite get into that target. And then 15% of the time they exceed the target. So that's the percentages of probability of what happens during a target zone. And it's kind of important because technically, if the market, there's a 15% chance if the market sells off from here, that's the end of the trend. I'm a probability guy. So I go with the probabilities and I kind of wait until we get into that target. And there is, you know, a little bit of room for statistical error and things like that. So we're pretty darn close. All right. We're kind of pretty close. That's all I have to say. All right. To getting into that high probability target zone. So we kind of have to be on our P's and Q's here. But I kind of think it looks like we're going to go back into that target zone at some point, even if we get a correction before then. And I'll show you why in just a moment when we look at the weekly charts on the live markets. All right, so that is kind of where we're at right now. Now, we have bearish divergence building in one of our indicators down here called the owl. And this bearish indication here is a divergence, okay? It's basically called a owl bearish divergence. And it occurs when prices are moving up, like you can see here, but the momentum that creates that move is moving down. So you kind of get almost like a funnel or megaphone type of appearance or visual when you look at that. And so that's bearish. And basically, you can have bearish divergence for quite some time. So it's not a reason to make a trade or an investment. But it does tell you when a trend is running out of gas and getting mature. So that's kind of where we are right now. So at this particular point here, we kind of got to be a little bit careful again when we get into that target zone. So the way I would play that is if you're long right now, you know, have your stops not so far away, but not too close because we're not in that target zone yet. And we probably are due for some profit taking before we go back in to higher highs. So you have to be ready for that. And it looks like we will have to take a look at the charts to see, again, the live charts to see if we're anywhere near that happening. But that's where we are now. And if anybody has any questions on that, feel free to ask. So to sum it up, all right, we're still in a bull trend. We're close to the bull trend target. And so we probably expect some type of pullback before getting into the target. So if we wait to get into that target, I do not think in terms of timing, we will have a significant sell-off, probably not until the end of 2024, bleeding over into 2025. And it is an election year, so I think the Fed's going to try to do everything to keep the market stable at this point, and that they need to lower interest rates to do that, to spur on the housing market. I certainly think they will. All right, so that's kind of where we're at. Now, the next chart I want to show you is going to give you a range for a pullback in this movement up. So remember I talked about here, pullback. So where is it going to pull back to? That's the question before it goes back up. So the next chart is going to help answer that question. So let's take a quick look at it. So as of Sunday, all right, what I did is drew fib retracements from basically a wave 2 and this big move up all the way up to where it is now, the wave 3 inside the wave 5. And that gives us a profit taking zone of around 37,580 to 36,150. All right. So if it pulls back, that would be where we would expect it to go and then go higher. All right. So just keep that in mind when we get to the live charts. We'll see if there's any change on that. But that is something I think important to keep in mind as well. All right, the S&P, very similar. Here's some charts I did on March 31st, which was Sunday on the S&P. So it's mimicking really the Dow, very much so. The target I have on the S&P is 5652 up to 6988. And if it went into a retracement right now, it'd be around 49 to 46 on that. So that's kind of where we're looking on that. But notice we have a green PTF, which is an indicator that we have right here, okay, that indicates that there is a 75% probability, that's the accuracy of this indicator, that even if we had to pull back, we should go back up. So that's a very important thing to take note of, because that supports that if we get any type of profit taking, that's all it is. It's not yet a time to worry about a bear market. And notice we had green going into here. Well, actually just yellow, I think, going into there. So we're getting close, I think, to a profit-taking pullback in all the indexes. If we look at the NASDAQ, similar situation there, okay? Similar situation. We're getting closer to its target at 18,850 up to 24,188. but we could expect a pullback down to 14,993 to 14,038. So all these pullbacks are what I would call profit taking, not a bear market. All right, Bitcoin. So Bitcoin, what was interesting about Bitcoin, you can't look at any financial news or anything without them talking about the coin these days. So what's really interesting about Bitcoin is if you look at, as of Sunday, if you look at all the charts, notice we have green PTF. So right away, higher highs are coming. And so we had back here a 3, 4, and that bottom held. And this is our 5 target zone for Bitcoin based on the 60-minute chart. Now, why is that important? Well, there's 5 waves inside waves, right? So we're still in wave 3 on the daily chart, but there are 5 waves according to the Elliott Wave analysis inside of wave 3. So once wave 5 completes on the chart on the left, then we'll have the end of wave 3 here, and that will represent a hook, which we usually see towards the end of any major trend. And of course, that hook is the smaller wave 5 inside the major chart you're looking at that point. So we have bearish divergence here also, okay, on the owl. But again, that's not a surprise. The trend is mature. We're almost at the end of it. So our target for Bitcoin is 75,000 up to 83,735. And then at that particular point, that'll be the end of 3. And then we can expect a major wave 4 on the daily. And we'll calculate that when we feel we're in the target. But you're talking about probably a 38 to 61% retracement on Bitcoin until that wave 4 is over. And then a more movement up after that. So Bitcoin may peak when the market peaks after the market takes its profit taking. So this wave 4 is a profit taking wave 4 that would occur in Bitcoin as well. So we may not see highs above 83,000 until probably we're talking the winter of 2024. Okay, so towards the end of 2024. Short term, I think probably sometime this summer, we'll see prices higher in Bitcoin, 75 to 83. And then after that, then we're going to have some significant profit taking in Bitcoin, bringing it down probably late summer, fall, and then rallying again in the winter. All right, that's kind of what we're looking at. Now, long term, okay, over here, all right, very strong momentum and here. So there's a case that we are still in a bull market in Bitcoin for sure, okay, as for sure as we can be. And therefore, any pullback, you should look as an opportunity at this point to accumulate the coin, all right? And then if you're a more advanced trader and you want to start selling at these short-term tops and getting back in, you certainly can do that. If you don't want to do that and just hold the coin, then I think you can do that, but you will have some volatility during these profit-taking periods. So I did want to cover that. It seems to be pretty much everywhere in the news, and I think that's important. Another fun way to participate in Bitcoin is through the stock market's GBTC, which is the ETF, Exchange Traded Fund for Bitcoin as well. So if you don't want to get involved in having coins and then having wallets and stuff like that, you certainly can go and just buy GBTC, and you'll get a similar movement here that you would in the coin itself. All right, so that's a great way to do that. I have both the coin and GBTC as well, so it's kind of fun to do both. Now, if you're thinking about the coin and you want a place to go where you can do your own research, Google places, Coinbase is very popular for that as well, to accumulate the coin. Then you can decide whether you want to keep it on their brokerage or you want to have a cold wallet or something of that nature. I'll leave that certainly to you. But again, GBTC is as bullish across the board really as the coin. So no problem there if you want to go this route. All right, the next thing I want to cover is the real estate market. Now, I know in some localities, the real estate market has declined a bit. Inventories are going up overall in the country in terms of more sellers on the market. I don't think it's that dramatic, but it is starting to increase. but I don't see enough decline in real estate to really say that the bubble that we're in and have been in for several years has really busted yet. Now, this is the Case-Shiller Index versus the CPI. And so let's talk quickly about this. So the Case-Shiller Index, and I update this chart every week. So the Case-Shiller Index is the red line here. And what that's doing is it's measuring the average prices of basically residential real estate in the United States. Now, there's a Case-Shiller Index for the UK and so forth, but this is primarily the United States. Then under that, you'll see a black line right here, and this is the CPI, Consumer Price Index, which takes into account inflation and so forth. So notice basically historically with the Case-Shiller Index, if it gets far away or bubbled away from the CPI, then you consider the market pretty much overbought and bubbled, and it is usually eventually followed by a correction to bring it closer to the Consumer Price Index. If you notice prior to 2000, if you go back here, it was a pretty tight correlation between the Case-Shiller and the CPI. Very orderly, so to speak. But the Case-Shiller homes always, if you go back far enough, really remained fairly above the CPI. So it was always considered a good investment or a hard asset, a good hedge against inflation because it kept up with inflation. And that's what this graph certainly has shown throughout, if you go back to the 1970s, you can certainly see that. So that's a pretty strong case that real estate is pretty much a good investment overall in terms of keeping up with inflation. All right, so the problem is that when you get far away in a bubble activity, and what can cause that? Well, you have mania in certain periods of time throughout history, not only in the stock market, but the housing market. And basically conditions are such that they create that. Now, this goes back, this is around the 2008 period, give or take a couple years. And you can see the bubble really kind of lasted actually a couple years here. So it's not unusual for bubbles to last a while. And in this case, what really created this was, again, moderate interest rates, low interest rates compared to previous years for sure. And then also, too, the demand for housing increased, but also, too, mortgages were very easy to get back in that time period. Pretty much if you could breathe, you could get a mortgage. There were no income check loans, and basically they were loaning the value of the property, and that had to do with the fact that lending changed. You had mortgage-backed securities, and so they cared more about that than the buyer's qualification. So they got all these mortgages, would pack them into collateral for these mortgage-backed securities, and they sold those on Wall Street. And so it was a matter of getting as many as they could in those packages because it was such a lucrative business that they basically foregone the strict mortgage lending rules. And so that was what fueled the 2008 bubble. And then you had the realization when the recession hit that people couldn't afford that. And so they were overextended and the market crashed. And you had short selling back then, remember? All those good times, and people were defaulting like crazy. Banks were going under. And then it reached a period where, okay, it had come down enough. Demand kicked in. Interest rates were even lower because of the problems after the 2008 financial crisis. They basically lowered the interest rates to spur the economy, and that created demand. And then we had COVID in 2019. So they just basically pumped money into the system. Made again, interest rates were extremely low, if not lower at that point, I think. And then, of course, many people got money in the form of payments from the government. So they had that money coming in, and many of the lenders forego payments and so forth. And here we are currently at these astronomical levels where you can certainly see that the Case-Shiller up here is extremely far away from the CPI. And you can see the CPI sloping up here as inflation kicked in. So here's the problem, all right? If you believe in history that things do create and go back more to the norm, you have to subscribe here that we are in a bubble and due to come down at some point to get closer to inflation. All right. So that's one case right there where we're probably 40%, a good 40% overvalued in real estate based on this graph. All right. So that's kind of an important situation to keep an eye on. Okay. So this graph supports a bubble. Again, bubbles can last a long time. So basically it's saying it's not a matter of if, it's more a matter of when. All right. Let's go on here. Let me just make sure I can inflate this so you can see this better. Let's bring this up here a little higher. How's that? Okay, so now you should be able to see this. This is another graph that supports the bubble as well, home prices versus income. And you can certainly see we are way out of whack right now. In other words, people can't afford homes at these levels. And this was back in 2003, and this was done by a company called RE Venture Consulting. They've done a really good job. I'm really hoping they update this in 2024. And here's your average income down here. So here's the 08 bubble, okay? And here we are worse now, all right, in 2023, and even worse now than 2024 because prices have been hanging since. So again, all points to a bubble in the market. People can't afford homes. So, you know, with real estate, if they can't afford homes, then how are they going to pay for these high prices? So this is another case supporting the problem in real estate now. And then this is a chart that takes into account all debt to income ratio for all home buyers. This is RE Venture Consulting again, indicating right now we're basically 40% above what it needs to be for people to afford homes, taking into account again debt as well. And debt is at an all-time high right now, thanks to credit cards and things of that nature. As compared to 2023, it's even higher. So you've got three charts here that I just showed you, all pointing to a bubble. So again, that supports real estate at some point coming down. All right, now this is kind of something new for 2024, again, from RE Venture Consulting. Listings have increased, okay? So that is coming into the February 2024 timeframe. I think that's continuing. So they're coming up, but they're still not great, okay? So that's what you take away from that. And if we break it down by state, okay, you notice the different states and how much of an increase. This is not prices, this is listings, okay? So this is some of the states with the biggest one. So Texas went up 15%, California only about 4.9%, Arizona 8.7%, Washington 26.85%, New York was down 3.45%. And so that's the spread across the country. And in Florida, we're up about 22.74%. So quite a bit of people moving there. Minnesota 34.69%. So anyway, it's kind of interesting. And so more listings are hitting the market. Now, here's an ETF, CBT, which measures residential real estate. And it's kind of neat to look at. So what's interesting using our tools here, short term, we're still seeing a downdraft coming. And I say that primarily for the PTF here. So maybe a little bit more to the downside to complete this kind of volatility we're in. And then at some point we should turn up because this is green and hit higher prices. So we're at roughly as of Sunday, 98.4. And the target for this bullish target overall is 118 to 140. So I would imagine looking at that, my guess is that the Fed's going to drop rates 25 basis points in June, which will increase the activity for the buying season in real estate, which could bring it up to there. However, all right, that doesn't mean we're out of the woods because this is still red here and that will head down. So I'm kind of thinking that, and again, this is another reason why I don't think a lot of people if you tune into YouTube, there's a lot of people out there saying we're going to have a big market crash in April. I don't think so. I think we're going to see the enthusiasm carry on throughout the summer for the most part. And we have to look out for the late or after election. Okay, I think everything could fall apart then for sure. but not, I don't think, before then. So we'll keep an eye on it. And this chart here, over here, with this bearish situation here, indicates that after this relief rally, we should see more selling or depression in the real estate market. So maybe at that particular point, things will start to crack. But I don't see them cracking for a while, okay? So that's kind of where I'm at. So I wanted to cover that and take a look real quick at the current Dow Jones situation. So we've got a red PTF here. These are live charts, okay? So this is the 60-minute, daily, and weekly. And as you can certainly see, we're coming down off its high back in the late part of March. So we're coming down here. So we may be getting ready to go into that profit-taking situation that I had mentioned here. And so I'm waiting for this to go red to see what's going to happen with that. So we'll have to wait and see. My target for the profit-taking situation, again, is around 36,990 based on current chart right now, down to 35,000. Then after that, most likely see more highs because now we have a green PTF on the weekly chart. All right, let me see what kind of questions are coming in today. This is from Frank. How you doing, Frank? Let me put your question up there. Ben, when Wave 5 finishes, how do you measure a pullback on the daily chart? I'm short MCD with profit. Can you tell if Wave 5? All right, on the individual stocks, Frank, bring that to what we call Stock Analysis Friday. So I'm not going to look up any individual stocks today. I just don't have time. In fact, I'm over my time right now. But I'm glad to look at McDonald's for you on Friday. Okay, that's what Stock Analysis Friday is for. And that's here at YouTube again. So just come to YouTube and you can watch that and put that MCD up there. I'll look it up there, okay? So that's kind of where we're at now. Now, Wave 5 on the daily, on the 60-minute chart, all right, will be the end of a major move on some of the other markets. So we'll keep an eye on that, but we still have more room up. So I think a little profit taking down here and then one more lift to the upside. I don't see us reaching the target until late 2024, okay? All right, hopefully that helped. All right, Gene's trying to give us a like today, okay. All right, so let me just cover a couple other markets here real quick. Let's take a look at gold. That's been soaring. All right, so we have now we have one more green PTF occurred back on the daily chart. So we're still going higher in gold. And my target on this was 220 to about 240. So we're certainly getting closer up there. I want to take a look at silver. Okay, I'm starting to recommended that, as you know, and I think this now is starting to break out. We had a classic pennant form. You can see that drawn on the center chart. We broke out that. Our pyramid trading points, which is part of our software that looks at the fractal dimensions of the market, also created a buy at around 21.5 back in early March. So we're in pretty good shape, I think, now in silver. And we're starting to break above some of the key supports on the long-term chart. So I think silver is something you want to be bullish in at this particular point. I know a lot of people were recommending that a long time ago, but they got caught in the sideways motion. But now I think that it's breaking out. So I think you're okay on silver. A lot of recommendation on TLT. I'm not recommending it. I've got a red PTF on the weekly chart indicating the bottom's not in yet. So I did not recommend it, and I'm not recommending it now. When it finally bottoms, I think it will be a great buy. I don't think that's going to happen until we see probably late 2024, and that may be a good place to put your money as the stock market starts to crash at that point. All right, so that's TLT. All right, UNG, natural gas, and USO, I'm going to end on here. Okay. So on UNG, we're still kind of near its lows, and it hit its bottom once again. So it's pretty low. Is this going to be a buy at some point? Absolutely. Okay, absolutely. Not quite yet. All right, just not quite yet. So let's wait until we get some bottoming here. Probably got some time on this, but I would stay away from it for right now. All right, let's take a look finally at USO, and we'll wrap it up for today. All right, USO is another one we have a buy rating on with a target between roughly 99 and 125. So I think we'll probably reach that target late summer, early fall. And I think in that particular situation, unfortunately, you'll see gas at the pumps go up dramatically from where they are now. So a good hedge against that might be for you to pick up some of the ETF USO, so you can at least enjoy the ride up on that as well. All right, so that's it. So there we are. I think that is a pretty good summary of markets and also some of the key commodities we're looking at, like oil and natural gas and things like that. All right, and of course we covered Bitcoin and we covered the housing market. All right, so listen, thanks for joining us today. Hope you got quite a bit out of this. My purpose of doing these, of course, is to keep you up to date on a weekly basis. Also, too, it gives me a chance to show off our software and to also show off how technical analysis works. So if you're not familiar with that, it certainly is a great thing to learn in order to better handle the markets. And we've been doing this a long time, and it's a great career. So you may want to consider that as well. All right, so we'll see you back here next week. Thanks so much for tuning in. For those of you that are our clients, don't forget we have client support in roughly a half an hour. So I'll see you all there. That's another free service that when you buy any of our materials, products, or services, you, of course, can come to the client support for free. We do that every week. It's for a half an hour. And that way, any questions that you have, I'm there to help you field those. All right, so have a good week. Always use risk control. And we'll put a little music on, and we'll see you next week. Thanks so much, everybody.